welcome to the Homebuyers Town Hall Corona. My name is Jenny Gonzalez, a realtor with Keller Williams. My license number is 01249788. Been licensed since 1998. My cell phone number is 951-316-0374. I'm very excited to be hosting today's show on the Powers Now TV. Thank you so much for joining me today. You can see today's episode along with past and future episodes on the Powers Now TV app on your phone and streaming devices. Today's show is being sponsored by Eric Frazier at First Bank and Morrison Plus Home Inspections. We have an exciting and interesting show for you today. First, I'm going to share some market data on what's happening in Corona. We're going to go deep today about what's happening and how you can keep up with the sellers and buyers market in this ever-changing market. And we want to talk about the change that is actually happening now. So we want to go deep into that discussion. Then we have Golden State Finance Authority here with us again today to talk about down payment assistance. And then we're going to talk about tips on how to prepare your home and yourself for selling a home. So that's our show lineup. We're going to take a quick commercial break. And when we come back, we're going to dive into the market.
The Powers Now magazines are the leading resource for real estate agents, mortgage bankers, entrepreneurs, and small home ownership businesses, providing leaders with business strategy information, resources, and tools through PIN, real estate, programming guide magazines. Stay up to the minute with real estate news and information from industry experts. Subscription is free. Sign up today. thepowersnow.com. thepowersnow.com.
So now I'm going to share some market data, real-time numbers on what's going on in Corona. So what I have found over the last month or so is very interesting. And I'm going to be honest with everybody. We are seeing a shift that has already happened over the last couple of weeks. I want to talk about our median list price. We're at $797,000, $800,000. Well, 2 weeks ago, we were upwards of almost $900,000. And our average list price 2 weeks ago was about $860,000, and now we're down to $739,500. Our price per square foot is going up, but if you look over here, the average days on market are doing well as well at 7 days and 24. But our big difference, everybody, is the price decreases. We're now definitely in double digits, and it's going fast. So the price decreases are actually happening super, super fast. Price increases, we were at 9%, now we're at 4%. Relisted, 3%. The good news is we were at 100 listings 2 weeks ago. Last week we were at 180. We're at 150 listings now in Corona. And we're 153,000 people in this town, and we only have 150 listings. The median rent for Corona is $3,400, which you can actually purchase a property, maybe not in Corona, maybe a condo or a townhome, but you can purchase a property in Southern California near Corona for the amount that you would pay in rent of $3,400 a month. I am not trying to get anybody out of Corona, but all I'm saying is if you cannot afford that, if you're coming from LA County or Orange County, which we border on, then we are cheaper than they are. So that is why we have this really crazy market. So I now want to go down a little bit and show this graph. So everybody keeps thinking that we're going to have some sort of a huge drop. But if you see, we really haven't seen that. So in the next episode that comes out on the 4th Tuesday of this month, I really want to see where the numbers are, because that's going to tell us exactly what's going on, because the interest rates have gone up, which has made it a little less affordable for those that were on the borderline. But we're seeing more FHA offers being accepted. We're seeing more down payments assistance being accepted. So that is what we're seeing. I'm going to go down a little bit, and I want to talk about our first-time home buyers. So right before COVID, we were at about $450,000 as a first-time home buyer. Maybe 500,000. And now 2022, we're at $620,000 for first home buyer, 1,400 square feet, 3-bedroom, 2-bath. The average age is about 35 years old. And if you look on the days on market, it says 0. Why? Because as soon as people put them on the market, they're gone. They're actually gone. So this information is key. But I also want to point something out. The price for the home buyer, the first time home buyer at $622 is about $20,000 less than it was 2 weeks ago. So you see where the shift is happening. So that is my presentation. So let's move on. I hope that information explains a lot, because it explains a lot to me. And that's why I want to dive into this a little bit more, because I'm not having a guest on today. This is going to be Jenny Gonzalez, the seasoned realtor, talking about what she sees based upon the last 23, 24 years. So with that, we're going to take a quick commercial break. And when we come back, we're going to talk about our shift that is happening right now.
Many Californians fear that they will not be able to pay their rent next month. Financial education and literacy are the catalyst for relief. So what resources are out there? A State of California program connects you with a HUD-certified housing counselor who can assist you on your financial education journey with no cost to you. Call today at 1-800-569-4287. Again, that is 1-800-569-4287.
And we're back. For those of you just joining us, welcome to the Homebuyers Town Hall Corona. My name is Jenny Gonzalez. Please go to thepowersnow.com and check out our other TV shows, magazines, podcasts, and special events. The Power is Now is a great resource for anyone looking to buy or sell real estate. So now I want to talk about what's going on right now. We're talking about May 2022. Yes, I'm going to date this video because there's been so much going on. We've got interest rates that were in the 2s, we're now in the 5%. We have down payment assistance programs that are being affected by this. We have people that are just sitting on the fence and don't know what to do. So I am going to do a little bit of a presentation and lecture kind of as to what I have experienced before, and how I can help in the way of getting you as a buyer or a seller to either figure out how to adjust things or to move forward now. So right now what we're seeing is rates have gone up, which means your payments go up, and the prices are now starting to go down. So it's kind of a double-edged sword. So you have a good thing where you have homes that are reducing their prices to a more affordable price, but in turn you have the interest rates that's making your payment higher. So I always tell my clients, if there is something that, if you're pre-approved for $500,000, go look at stuff from $450,000 and up, because you're going to still have that competition. Why are you going to have that competition? Because there's too many buyers and not enough listings. Still, even though we're in this shift, we are still going to see listings above ask price. But the point is you're not going to see so many listings listed too high or unnecessarily high. Now, this is different compared to the last shift we had in 2008. Excuse me, 2008. And we had the opposite problem. We had too many homes, and the interest rate back then was about 6%, but we didn't have enough buyers. And why didn't we have enough buyers? Because of the interest rates and because of what was going on with the economy. So this is a completely thing. We're kind of backwards from where we were in 2008. We don't have enough inventory where it was too much inventory before. And I know before with the 2008, it just took a lot of people out. This one is not going to take a lot of people out. I want to talk about what started this. What started a lot of this is the fact that a lot of people were, or agents, I'm going to say, were encouraging their buyers to just buy up, removing contingencies for home inspections, for termite, for appraisals, and they would just come in with the extra money. And the lenders were allowing this as well. Appraisers are being really smart now. I'm seeing a lot of appraisers not bringing the appraisals in even close to where the purchase prices are. So the appraisers are trying to help stabilize the market. That's what's happening. Because I have had so many people, when I announced there was a market shift last week, and I had people say, thank goodness, because it's made us really nervous as agents, how the prices were just continuing to fly up. Because in our eyes, it doesn't help us with our buyers. It helps with the sellers. Yeah, they're happy. They get all their money and they get the most money out of their home. I mean, completely. They get more money than they think. Every single time, every single seller, they're getting more than what they thought. But at this point in time, it's still going to happen, but it's going to happen in a different way. Let me give you an instance. So in order for there to be a true market shift, there has to be 40% REOs or repossessions, foreclosures. And what we are seeing now is, number one, we are seeing people that are deciding that they want to sue their buyer's agent, listing agents, and sellers because they find stuff wrong with the house, even though they removed those contingencies just to get the house. Because now it's coming back to them. They're finding things wrong with the house that they can't deal with. And me personally, the buyers that I've had over the last 3 years, I've actually gotten less than asking price. I got credit for my buyers, and they were happy campers. I really don't believe in forcing a buyer to pay more than what they are actually willing to pay or actually able to pay. So then we have another thing happening. So you have people that can't pay their mortgages now that have bought in the last 2 years. And now we're seeing notice of defaults on those properties that they just bought. So what's going to happen with those properties? If they don't sell them now while the equity is still there, they're going to end up in foreclosure. And that's not what we want, but that's what's going to happen. And, all we can do is reach out to you. If you're one of those people and you've been sitting on the fence or whatever it may be, whether it be buying or selling, and just reach out and have a consultation with me, and I can show you, the nitty gritty of what's happening and what is being forecasted. I can get you statistics. I can do all that. But as a seasoned realtor, I'm not afraid of this. What I'm afraid of is the people that have been hanging on and saying, oh, it's going to continue to go up and I'm going to wait for this date and then I'm going to sell. You're not going to have that equity that you thought you were going to have. And I'm worried, I'm worried about the retiring people because of their fixed income. And it's really difficult on my end sometimes because I get emotional about it because I care so much for my clients that I don't want to see them in a bad position. And that's why when I have a buyer, I make sure that they're not overpaying on a house. And when I have a seller, I make sure that they're being fair on a house. And I think that's the way it should be. And that's the way that all of us agents here want it to go back to being. We don't like this market that we had was crazy. And, having COVID in the middle of it was just, really, really hard. So I just want to let everybody know that, no, I'm not saying, the sky is falling, the sky is falling. No, the sky is not falling. But what is falling is opportunity for some people that are losing their opportunities right now. And I'm calling them to action, to give me a call. And if you don't do that and you're not able to do the things you want to do that you planned on doing, then, it's really hard for me to see it. I've gone by some houses that have been in notice of default just over the last couple of months, and they're empty already. The people are just abandoning the houses instead of waiting and saying, oh, you know what, I can cash out. They're just leaving their houses. And that's not helpful for neighborhoods. That's not helpful for the sellers. I mean, why would you just neglect and just leave money on the table at this point? There are so many areas around Corona and the outlying areas that I've been able to put people in, and they're so happy there. You know, they didn't think that they would be happy there because maybe the next town over or 2 towns over from where they wanted to be. And then they're telling me, you know what, that was the best thing that we did. So I just want to talk about that because in a shift, you know, it really kind of is confusing for buyers and sellers. And that is why I am here as a professional realtor of over 23 years to help you with that. And I don't do it. I've been doing this. I do it for the relationships. I do it for helping people. I'm not doing this for, you know, the glory or anything. I'm just here to educate everybody as to what is going on, what they can do. I'm on here, you know, talking about home inspections. I'm sitting here talking to the city mayor. We did, you know, went down to the Corona tire shop. You know, I'm trying my best to educate everybody about what's going on in Corona. So I think if you are on the fence, please give me a call. I'm at 951-316-0374. I guess at that, I think, you know, that's enough to talk about. But I don't want people to get scared and say, oh no, it's going to be this big, humongous thing. I really don't think so. It's going to be slow, but I want to inform everybody now what is happening. And we're not just seeing that here, we're seeing it in San Diego, we're seeing it everywhere. We're seeing it north of us in LA a little bit. So I just wanted to come on and talk about the shift a little bit. So we're going to take a quick commercial break. And when we come back, we're going to talk about down payment assistance with Golden State Finance Authority. You are watching the Homebuyers Town Hall Corona on the Powers Now TV. We will be right back. And we're back. For those of you just joining us, welcome to the Homebuyers Town Hall Corona. My name is Jenny Gonzalez. Please go to thepowersnow.com and check out our real estate magazine, HUD magazine. There's lots of deals by our VIP agents on the Powers Now TV. Today we have Carolyn Sinceri from Golden State Finance Authority. Welcome, Carolyn, to the show.
Thank you, Jenny. It's great to be here. I'm excited to delve into the down payment assistance programs from Golden State Finance Authority. The way that I like to discuss the topic with real estate agents is really from a perspective of you not losing sales, not losing transactions because of someone's financial position. And oftentimes a real estate agent is the first person to kind of find out where someone is in terms of what kind of resources they have. And so you as a real estate agent can be the link to programs that can make a difference, that can maybe get them into a house sooner than they thought possible, maybe give them more purchasing power. So imagine as a real estate agent, what can down payment assistance do for you and your clients? Golden State Finance Authority has been offering home buyer assistance programs in California for almost 30 years. We've been able to help over 83,000 individuals and families to purchase homes. And the vast majority of the time, it's because of the down payment and closing cost assistance that we provide. We've been able to provide over $634 million in down payment and closing cost assistance money in California. Now, we are a public agency, a quasi-governmental agency, and that gives us the ability to take your standard mortgage products that we've all heard of, and then couple them with down payment, closing cost assistance, and flexible guidelines to allow for people to get into homes maybe sooner than they thought possible. But when people think of down payment assistance, whether it's a lender or home buyer or real estate agent, oftentimes they hesitate to look into it because they're worried about some of the things that may actually make it more challenging. So let's start off by just talking about the flexibility and maybe breaking some of the myths out there around down payment assistance. When it comes to Golden State Finance Authority's programs, we really focus on accessibility. So they are not limited to first-time home buyers. So whether somebody is returning to home buying, they owned a home in the past, or maybe they're a first-time home buyer, or maybe they own a property today, but they're going to be purchasing a new residence that they're moving into as an owner-occupied residence. And I don't mean new property. I just mean they're going to be moving into a new home to them, and the cash resources to get in with down are short. So again, no first-time home buyer requirement on the GSFA programs. In addition, the down payment assistance that our programs provide is up to 7% of the loan amount. And that's a lot of money. We're going to look at an example of how much cash that really can give them. The income limits are extremely flexible. In fact, we don't even have income limits on government loans, but we'll dive into that a little bit more, as well as some of the qualifying guidelines. But I'd like to start off with dispelling the myth that you have to be you have to have perfect credit, or that you can't have any debts or liabilities. It's very flexible. FICO scores are allowed as low as 620, and even debt to income ratios up to 50% can qualify. Variety of different financing options, and the programs are available throughout the state of California. On your screen is an example of utilizing our Open Doors program to purchase a house at the maximum loan that we can actually finance through the program. The loan amount, the maximum is $548,250. So I'm using a scenario of the highest amount purchase price, the highest sales price on a home that would allow you to only use the down payment and closing cost assistance from Golden State Finance Authority to buy that house, okay? So this example is a home of $565,000. They have cash of their own. They would be able to purchase higher than this. If they had resources to cover the closing costs, they could purchase higher than this by using all of the money we provide towards the principal. But this is an example, $565,000, and that allows them 7% or up to 7% in assistance. That comes to $38,363, and leaving them with a mortgage loan of $548,50. Now, $38,000, imagine that. That is enough to cover the minimum required on down for a conventional loan that only requires 3% down. That's enough to cover that $16,950 in down. And it leaves them with another $21,000 for closing costs. They have some cash of their own. They can apply that additional $21,000, apply the entire $38,000 coming from Golden State Finance Authority towards the transaction. And that would allow them to purchase probably up to about $580,000. And just showing you an example here of how the affordability can be maximized through using down payment and closing cost assistance. Now we have two different down payment programs. The first one is called Platinum. It's been around a little bit longer. It's been around since 2010. It's our most popular one, and the reason is because for certain occupations in law enforcement, firefighting, and all the support staff in schools, whether public or private, and within the medical and healthcare industries, we provide the down payment assistance for this program, Platinum, as a gift on the first day that escrow closes. So they start out with equity in their home on day one and don't have to pay back that assistance. Now, outside of these specialized occupations, the rest of the borrowers are getting the down payment assistance as a 0% second mortgage instead, and it's forgiven after 3 years. So instead of a gift on day one, the other borrowers will be getting a second loan that has no interest, no payments, and after 36 months is completely forgiven. And that's what I think makes this program the most attractive to home buyers. But when you want to refer someone to a GSFA participating lender, the lender is going to dive into the nuances of these two programs and what's the right fit for them. And I'm just covering some of the highlights of these two programs. The Platinum program allows 640 FICO score on conventional loans, 660 on FHA, and as low as 640 for VA and USDA mortgages. And then you'll notice that the maximum debt to income ratios are around 45 and sometimes up to 50% when the borrower has a little bit higher FICO. Now, the second program is geared towards providing more in assistance. Platinum was able to provide 5%, Open Doors provides up to 7%. So the borrowers that don't have down payment money, they also don't have closing cost money, sometimes being able to get up to 7% is going to be a better fit. This program might be the better fit. Now, the assistance provided for the Open Doors program is provided as part gift, up to half of it as a gift, and the other half as what we call a 0% second mortgage that's due and payable when they sell the property or they refinance that mortgage or the mortgage loan itself is paid off. So there is a repayment of part of the assistance that's provided for this Open Doors program. But again, when you have a borrower that doesn't have a lot of cash resources and they can qualify for a mortgage today, this allows them to get into the property today, to start building equity, start building financial security, knowing that the assistance that was provided to help them, up to half of it is completely forgiven, and the other half they would pay back at some future date without any interest on it. The FICO scores that are allowed for the Open Doors program become a little bit more flexible. We can go down to 620 FICOs and up to 55% on debt to income ratios, depending on the underwriting approval. Now, all of the programs are for, both of the programs are for the purchase of a primary residence. It's going to be a residence that they own or occupy, but the programs can go up to 4 units. And maybe you've never considered that. You have a borrower who has this picture of the perfect little property that they're looking for, but you know that we don't have the inventory out there and that they may have to start thinking outside the box. So consider how a borrower might actually be in a really good position by buying a duplex or a triplex. Up to 4 units can be financed with our down payment and closing cost assistance programs. All of the mortgages, whether they are government loans, FHA, VA, or USDA, or a conventional loan, they are 30-year fixed rate interest, and the maximum loan amount, as I mentioned, on the mortgage, the first mortgage, is going to be $548,250. Now, sometimes it's going to be really advantageous for a borrower to go with conventional financing, and that's because those borrowers in a lower income bracket that can qualify for conventional financing are going to get more attractive pricing, meaning better interest rates on the program. They're going to get better coverage, better costs on their MI because they don't have to have as much mortgage insurance, and they'll have a little bit more flexibility in the down payment options. But I don't want you to think that you have to be low income. You don't. A borrower can qualify for FHA, VA, and USDA loans, government loans, no matter what the income is. We don't have an income limit. Now, you do have to refer to the agency guidelines. So if there is an USDA income limit for a property, that might apply. We don't apply any income limits. And for conventional financing, our income limits are really high. There's an example here on the screen of San Bernardino, Los Angeles, and Riverside County. And as you can see, it's a really high income. It's like $162,000 that they can still qualify for down payment and closing cost assistance. As I mentioned, there's some MI advantages, some mortgage insurance advantages because the coverage that they need on a conventional loan for the borrowers in a lower income bracket at 80% of area median income and below, their coverage level actually drops drastically. But you know, this is where the loan officer gets involved and what's going to be the best fit for them. Now, as a real estate agent, I get a lot of questions about whether or not accessing or referring somebody to a down payment assistance program is going to make the entire escrow slow down or make it more challenging, you know, and how can they reassure a seller or a buyer that down payment assistance is a good option, that you know, a seller should not hesitate to take an offer with somebody who's getting down payment assistance. One of the biggest factors has to do with how we don't have any compliance review. We leave all of the actual mortgage loan processing and making sure that the borrower qualifies, we leave that to the lender. And so the only step where a lender is working directly with Golden State Finance Authority is at the time that they lock in the interest rate. And that when they do lock in the interest rate, they obtain a commitment for the down payment and closing cost money as well. And that step is really important. But once that lock is done, they are given those documents from Golden State Finance Authority, and then they go through the mortgage loan just like they normally would, which means your lenders, your GSFA lenders, can process down payment assistance programs in 30 days. I was on a call just the other day, and we had a lender who was saying that they could do 22 days. So keep in mind that just because it's a down payment assistance program, when you work with GSFA's program, it's not going to slow down escrow. There isn't going to be an additional compliance review step or additional forms that have to be turned in or a package that has to be reviewed that you then think could actually cause a problem during escrow. And the qualifying guidelines are so few. You yourself, if you had the ability, could talk to the borrower and mention the FICO limitations or FICO requirements of 620 or above, or the DTI. You know, on our website, we have the income limits for conventional financing, so you're able to look at that. And then, you know, knowing the needs of the borrower, get them in touch with a lender that can really look further into their situation and figure out which program will be best. But I don't want you to take my word for it. Here on the screen is some testimonials from people who have actually written in letters thanking GSFA for the program, for getting them into houses. And as you can see, you're looking at a borrower here that's getting $13,000, another that got $18,000, people who were renting for years and years, and even during COVID have been able to purchase a home and move into it. How do you get started? As a real estate agent, it's really important that you work with a GSFA participating lender, especially the ones who are experienced in GSFA programs, because they're going to understand the guidelines. They're going to, you know, have a process in place for locking in the loan rate and getting that commitment letter, and they're going to stay in contact with you. That is really important. And so what I suggest for all of the real estate agents is to develop a one-on-one relationship with lenders and loan officers themselves so that you can do referrals the minute you find out that a borrower has a need for down payment and closing cost assistance. Our lenders are going to be the one to furnish the interest rates and to provide the applicable APRs. They're the ones that are going to go through the application, the mortgage loan application process, and check eligibility, and then determine whether it's the Platinum program or the Open Doors program that's going to be the best fit for the borrower. We don't expect real estate agents to memorize all the guidelines, but understanding the key features of the program, understanding that they're more flexible than most people think, that they're not limited to first-time home buyers, that's the first step. Because once you believe in the value of these programs, you can then educate your borrowers and link them to GSFA participating lenders. Now, as Eric mentioned, we have done some videos on the website. And so if you would like a more in-depth look at either the Platinum or the Open Doors program, we highly encourage that you visit the website and look at the program pages. There's the videos on our YouTube pages as well. And also on the Power Is Now website as well. These videos really dive into how the programs work There's even a video with a couple who have used the Platinum program and share their experience. First Bank is one of our participating lenders. You have Eric with us today, so I highly encourage reaching out to him. His contact information is here. Thank you for joining me.
Thank you, Carolyn. Now let's hear from Eric Frazier with First Bank about CalHFA and other great down payment assistance programs. Welcome to the show, Eric.
Thank you, Jenny. And I really appreciate the opportunity to talk about down payment assistance and home loans on your program. You're doing a fantastic job being the host of the Homebuyer Town Hall Corona. Now, for those of you who may not know me, you have seen me on other platforms on thepowerisnow.com. In addition to being the president and CEO of the Power Is Now, I'm also a vice president and mortgage advisor with First Bank. My license number is 461807. The views and opinions that I express are my own and do not necessarily reflect that of First Bank. First Bank offers a variety of loan programs, including down payment assistance. We are an approved lender with the California Housing Finance Agency, as well as the Golden State Finance Authority. Now, you just heard a presentation from Carolyn, and the Golden State Finance Authority is an incredible program. And what I love the most about it is that if you're a teacher or first responder, then they're willing to provide the money to you free. And this is on both the Open Door program and also on the Platinum program. Now, primarily on the Platinum program, it's free, 5% in down payment assistance. And on the Open Door program, you can get as high as 7% in down payment assistance, but that is not free. That is not free. You'll have to pay it back. But the fact that you can get down payment assistance without having to make payments at zero interest or low interest is pretty amazing. So in addition to having the Golden State program, we also have the California Housing Finance Agency program. California Housing Finance Agency has helped over 200,000 people buy a home. 200,000 and providing them down payment assistance. And there are some unique differences between the Golden State program and the California Housing Finance Agency program that I would like to point out. And this will be a great way in kind of doing a high-level overview on what you just heard from Carolyn and what may also be available for you with the California Housing Finance Authority. The first difference is that the Golden State Finance Authority, they have a maximum loan limit of $647,200. Now, prior to the increase in the new loan limits by FHFA, their limit was $548,250. So effective the 1st, it goes up, the 1st of January, it goes up to $647,200. Well, with the California Housing Finance Agency, prior to this increase, their limit was $822,375. Now, effective in January, it will be as high as $970,800. So imagine being a first-time home buyer and being able to buy a property needing a loan of $970,800 and being able to get down payment assistance to buy that property. Well, that's what's available with the California Housing Finance Authority. And so that's really a significant difference. First, the fact that you can get more money. I'm so happy that the government increased the loan limits. We've needed that as property values continue to increase. Another difference between the Golden State Finance Authority and the California Housing Finance Agency is that you don't have to be a first-time home buyer with the Golden State Finance Authority. With the California Housing Finance Authority, you have to be a first-time home buyer. Now, there are exceptions to the rule. You have to be a first-time home buyer. If you currently own a property right now, you're living in that property, then you will not be eligible. With the Golden State Finance Authority, you can be in a property right now and buy another home. No problem in getting the down payment assistance as long as you're going to occupy the property. With the California Housing Finance Agency, if you live in a property that you own right now, then you will not be eligible for financing with the California Housing Finance Authority. But let's say you own a property, but you've been renting in the property you live in. You've been renting for the last 3 years. Perhaps you own property because you inherited. It was given to you by your parents. Well, that would be one exception. Another exception would be that you lost your home through a natural disaster. That would be another exception. If it's happened, say, within the last 2 years, you can reach out to the California Housing Finance Agency and you can utilize down payment assistance to purchase another home because you lost your home through a natural disaster. So those are some of the exceptions to not being a first-time home buyer. Another exception that is unique, again, with the Golden State Finance Authority is that they'll allow you to buy a single-family home or a 2, 3, and 4-unit property. Whereas the California Housing Finance Agency will limit you to just a single-family home. They will make an exception if there is an ADU. And right now, ADUs are very popular. Most cities, regardless of where you live, will allow you to build an ADU. And that's something that the California Housing Finance Agency will assist you in doing if that's something you want to do. If you own your home already, if you want to build an ADU, there is money available up to $25,000 to help you with pre-development costs to build an ADU on your home. But to purchase a home, you got to be a first-time home buyer, and it has to be a single-family home zone in a residential zone, by the way, as well. So very, very important. Another big difference between the California Housing Finance Authority and the Golden State is that the down payment assistance and the closing cost assistance are two separate programs. So with the down payment assistance with the Golden State Finance Authority, it's really just all in one. If you get the open door or you get the platinum down payment assistance, the money can be used for either down payment or closing costs, or you can use all the money for down payment or all the money for closing costs. With the California Finance Agency, they have My Home, and the My Home is just for down payment, right? Just for down payment. And it can go as high as $15,000 or 3.5% for government loans, FHA, 3% for VA, 3% for conventional loans. So you're going to have to balance between the maximum amount in terms of the dollar amount they'll give you and the percentage. If you exceed $15,000, which is the dollar amount they'll give you, then you may be able to get more money if you meet certain parameters. And I'm going to talk about that in just a minute here. So 3.5% of My Home can go towards down payment assistance, and 3% can go towards closing costs, and that's called ZIP, stands for Zero Interest Program. And that simply means that they'll give you up to 3% of the total loan amount, which includes mortgage insurance, towards your closing costs, provided that, again, you are a first-time home buyer, you meet all the other requirements. There's no dollar limit on the ZIP, but there is a dollar limit on the down payment assistance under My Home. Now, there are just a couple other differences that I want to bring out in regard to CalFHA and Golden State. Another difference is that with the California Housing Finance Agency, the down payment assistance you're going to receive, whether it be My Home or ZIP, has to be paid back. It is not a grant. It has to be paid back. And in fact, on My Home, it's at zero interest, but on the, not on My Home, on ZIP, the zero interest program, is at zero interest. On My Home, where you're capped at $15,000 or 3% or 3.5%, depending on the program, you have to pay that money back. And there is an interest rate. You can go to the California Housing Finance Agency website, or you can download my mobile app at qualifiedtobuynow.com. Qualifiedtobuynow.com. Put in your telephone number and hit send. It'll send you the link. Download my mobile app, and you can see what the rates are on a daily basis for both the California Housing Finance Agency as well as the Golden State Finance Authority. And so there's interest to be charged on the My Home, no interest on ZIP, but both have to be paid back. With the Platinum program, you don't have to pay the money back after 3 years. It's forgiven in 1/3, and then it's completely forgiven. With the Open Door, at least half the money has to be paid back when you sell the house or refinance. With California Housing Finance Agency, half the money has to be paid back if you refinance or sell the property. Very important. Here's a couple of game changers that are really differentiators. With the Golden State Finance Authority, you don't need co-signers. I mean, they will allow you to have co-signers and co-borrowers, non-occupant co-borrowers. But with the California Housing Finance Agency, they don't allow co-signers on many of the programs, particularly the VA and the conventional product, and they don't allow non-occupant co-borrowers. So there are many differences between the two programs, and it's so important to sit down with a mortgage advisor that specializes in down payment assistance so that you can get accurate information. Now, I've done a complete series of interviews with Carolyn Sansori about the Golden State down payment assistance, not My Home, but Platinum, and also the Open Door program. You can find that video on their website at gsfahome.org or on the Powers Now website at thepowersnow.com. Look at Mortgage Spotlight. If you're interested also in interest-only loans or home equity lines of credit or super jumbo loans up to $3 million, we handle that here at First Bank. We can do just about anything, and we lend in 48 states. And so if you're watching in another state, give me a call. You can reach me at 714-475-8629 or drop me an email at eric.frazier@thepowerinnow. Thank you so much, Jenny, for this opportunity to talk about down payment assistance and other loan programs. And folks, I want to encourage you to tune in and watch Jenny on all of her shows.
And we're back. For those of you just joining us, welcome to the Homebuyers Town Hall Corona. And my name is Jenny Gonzalez. Please go to thepowersnow.com and check out our Realtor and Homebuyer seminars coming soon online. Register today to get your seat. I promise you won't be disappointed. So now I want to talk about selling real estate. And I want to give a few tips to sellers. So I do have 3 tips for sellers with regards to selling your property. So let's talk about 2 of them, because in order to have the 3rd one, you actually have to call me and have a consultation. So number 1 is to have a termite inspection done on your property, because that is the number 1 surprise on the properties when we have surprises is termite stuff, whether it be wood damage, dry termite stuff. It causes havoc. I had one instance where I had a client that had this beautiful decking off of their master bedroom upstairs, and it was puzzle piece type of decking, and then it went down a staircase and then down and out to the pool in the backyard, so they could just come from their bedroom. Well, originally when the termite company came out and did a quote, they just did, a basic quote. But what actually happened was, once they started getting into it, they started finding more and more and more. But the huge problem was, because that person used this unique puzzle piece type wood material, that you fit certain pieces with certain pieces, it was literally going to triple the price of replacing that. So what ended up happening is the buyer said, no, I don't want that torn down. I want to leave it. I'll figure it out. Now that buyer should not have had to do that. If they would have had someone come out and get done before we listed it and taken care of it before we listed it, we wouldn't have had that heartache, or we would have been able to say, hey, this is what's going on. You have a choice. We can either tear it down and you can build it, or we just say nobody's going to do anything. So that is very important. Number 2, you're going to love me for this one. Get a home inspection. Why? You want to get a home inspection so that you can make those repairs prior to a buyer's home inspection, so that stuff that you can say that this stuff is already done. And you don't have to worry about these requests for repairs. It's already done. When I go for a listing appointment, I do my visual, and I will tell them, you need to cut that branch that is almost touching the roof. I will tell them, your carbon monoxide detector is in the wrong place. I will tell them, I'll look under the sink. If you have that flex piping under the sink, please change it out. So, things like that, just be proactive with it. And those are my key things. And that's why I have no complaints from my sellers. And that's why I don't need to, I don't have that stress in my transactions, because as long as you and your client and the clients understand the process and what makes it easier to sell a home, then there's less stress. So if you want to know what number 3 is, you have to call me. So again, I'm going to give my information. My name is Jenny Gonzalez. I'm with Keller Williams Corona. My license number is 01249788. I've been licensed since 1998. My cell phone number is 951-316-0374. My email is jengonzalezre@gmail.com. And my website, which is phenomenal, you guys, go into it, jennygsaleshomes.com. And with that, I thank you for attending my show on the Power is Now TV. I hope my information today was beneficial to you. If you would, if I could be of any assistance to you on buying or selling your home, please contact me. And remember, the power is now to buy or sell real estate.
The Power is Now Media is worldwide with growing audience of future homebuyers, investors, builders, developers, real estate agents, and brokers. The Power is Now Media is well positioned to increase awareness and produce results for our growing roster of advertising partners. An advertisement on any of our platforms is the right step toward reaching and communicating key brand messages to a targeted network of individuals, families, and communities interested in housing. Our content areas include feature stories and profiles on successful real estate agents, business owners, government, and community leaders. The Power is Now magazines are the leading resource for real estate agents, mortgage bankers, entrepreneurs, and small home ownership businesses, providing leaders with business strategy information, resources, and tools through PIN, real estate, and programming guide magazines. Stay up to the minute with real estate and mortgage news and information from industry experts. VIP agents are able to feature listings each week. The Power is Now TV radio podcast features weekly shows that include Homebuyers Town Hall, Real Estate Roundtable, VIP Agent Spotlight, and so much more. Each week, VIP agents have opportunities to be featured guests on the shows. VIP agents can discuss and showcase houses, neighborhoods, and provide brief introduction. The interviews are unlimited 10 to 15 minutes on each current listing. This product alone separates you from your competition. The Power is Now delivers to you market update interview to promote listing weekly, promotional biographical video, co-host a bi-monthly Homebuyers Town Hall show, featured subject matter expert on Real Estate Roundtable show, The Power is Now program guide e-magazine, The Power is Now national e-magazine, article writing and blogging, social media content customization, inclusion and press releases, graphic design services, business and performance coaching, technology support, referrals, lead generation opportunities, and management support.